AMD is falling behind Nvidia, and Wall Street is starting to notice. With a fresh downgrade and doubts about AI data center demand, investors are getting nervous. But is the fear justified, or is the market misreading the future of AI hardware? We're breaking it all down, and at the end, we'll tell you whether this is a dip to buy or a warning to heat.
Gary, thing number 4, we're talking AMD. Seems like everybody, or at least it's not a bad thing in the sense of trying to keep up with Nvidia can be
There you go.
exhausting. We've been talking about skepticism around lack of AI data center demand, which we'll touch on in this thing. But Gary, thing number 4, AMD's outlook falls short. What do we need to know about AMD?
So, Rob, last week, Jefferies downgraded AMD. Now, normally I ignore the sell side. I don't find them to be particularly useful. However, this Jefferies report, I think, made some really important points. They cited weak GPU performance relative to Nvidia. Okay, that's a fair point. Now, in fairness, if you're a gamer, you might be saying, wait a minute, I get 500 FPS, on my favorite video games using a less expensive AMD GPU. Fair enough, but the GPUs that Jefferies was referring to are not the ones used for computer games. They're really talking about the ones to train AI models. And in that area, Nvidia remains the market leader. It is going to be very difficult to unseat them. There's also more competition coming from Intel. So, there we go. They also cited potentially declining AI data center demand. That's something we've been talking about here. And disappointment from AMD's outlook on its data center business highlights the widening gap between them and Nvidia. They've got declining data center revenue. And because of that, they're facing lower share prices and more investor doubt. So that, I think that's what the key point is. And they gave guidance recently, and their projected guidance was for a down quarter on data center revenues. So, they're flat out saying we're looking at down revenue, not a slower rate of growth, but down revenue. And that's why the stock is down.
Yeah, I mean, Gary, anything else to point out in terms of why you think the stock is going down and in that direction? And then how much of this has to do with also, DeepSeek and what they've really done to disrupt this market?
Well, I think we should separate out the two issues that Jefferies raised. I agree with them on the GPU performance versus Nvidia. The fact is AMD is still a powerhouse in CPUs for servers and gaming computers. They've done unbelievable work and grabbed huge share there. But right now the market is punishing the company for the gap between them and Nvidia. And, that persists. And again, it's because of not only Nvidia's performance, but the way these models are designed. Everything is optimized for Nvidia right now. And so it's going to be really difficult to unseat them. And AMD is struggling doing that. I think Jefferies is right on that. I'm not at all convinced that DeepSeek is going to lead to a lack of AI data center growth, or that growth is about to decline. We've covered this in the 5 things multiple times this year. I think the story that DeepSeek is going to destroy the AI hardware business is overstated and misunderstood. For one, I don't think DeepSeek did what they say they did. I think they had access to better chips than they claimed. I think they spent more than they claimed they did. Beyond that, there's no free lunch. There are no shortcuts. The thing that happens with DeepSeek's models is they partially train those models. They say, what are the questions people are most likely to ask? Let's research those. And they don't do the follow-on work. And as a result, and that's okay, I'm not saying that's a bad model, but as a result, training the model is much faster, much cheaper, requires a whole lot less infrastructure. And that's what people are focused on. The part that people are missing is that when you train a model in the way that DeepSeek does, every time there's a subsequent inquiry. So when you use the model, it's going to be slower, use more energy and more GPU resources to finish the research. And so basically, it's a matter of, do you want to do your work up front and then have very little to do ongoing? Or do you want to do a quick and dirty up front, and every time people make an inquiry, you're going to use a lot more in resources. So that's the choice that DeepSeek made. And when people are saying, oh, it doesn't use as much infrastructure as a result, the AI hardware business is going to be crushed. No, it means they're choosing to put the expensive work on the back end. Now, again, I'm not criticizing DeepSeek. I'm just saying people are misinterpreting it.
Great stuff there, Gary. And again, we'll keep in tune with everything happening AI. Obviously, moving very quickly. Lots of players in the space and how they're going to navigate and position themselves moving forward. This is the 5 things to know in investing this week from Deep Knowledge Investing, the non-transitory inflation issue. Again, be sure to head to deepknowledgeinvesting.com where you can sign up for a free subscription and be notified of upcoming 5 things distribution via email, as well as other content material being published on the DKI website from Gary, board of advisors, company updates, stock positions, etc. And we also have an Ask Gary feature on the website. If you have any questions about anything we're discussing on the show, or you'd like just additional information, or maybe dive a little bit deeper on a particular topic, please use that, send in your question, and you may see that question show up